Hey guys, thanks so much for tuning in. It's Thursday, July 21st, and hopefully the fourth time is the charm. We've had a lot of internet problems today and yesterday, but David Jensen is persevering and he's kind enough to join us again right now. Of course, you guys know David Jensen from safehaven.com, where he's posted more than 40 articles, and we carry his work at SGT Report. David, thanks so much for joining us.
Good morning, Sean. My pleasure.
Hey, thanks for hanging in there. Yesterday was painful. We finally threw in the towel and we rescheduled for today. And I found out that Comcast had a neighborhood outage in my area, so we're going to just try to muddle through. I wanted to start, David, by getting your impressions on Wednesday's action in silver and gold. Silver took a huge hit, and I couldn't find any news or rationale as to why that was happening. Now, today on Thursday, we see silver bouncing back a bit. What was your impressions on what happened yesterday?
Well, it's on a day-to-day basis, it's always really tough to tell because you're dealing with a market that's not actually trading metal. They're trading in promises, and as a consequence, as we all know, promises can be created without limit, and they can be sold down, shorted down. The price can be shorted down, and so the day-to-day action, there's nothing that I can really comment about in terms of fundamentals. What we do know is that we are at the largest commercial short position in history in the silver market, and I would expect to see some attempts for a precipitous sell down of these short positions. But I think the fundamentals are really, really working against the silver shorts. Gold, there's a lot of above ground supply. It is tight right now, as we know from Mark O'Byrne, in terms of the 400-ounce good delivery bars. But the silver is the one where we're seeing an estimated 4 to 6 billion ounces of claims in the London market. And we know that all of the world's refined above ground stockpiles are about 1 billion ounces, and those billion ounces aren't necessarily available for sale. So you've got this enormous mismatch. And so, you know, we expect to see much, much higher prices as the paper system breaks. And we're seeing all kinds of signs of that, from the miners being approached by electronics manufacturers to new physical contracts being set up, to hearing about stress in the interbank market in London. So all kinds of signals there, Sean. But the day-to-day is very, very difficult to tell because we're not dealing with the real market where there's actual price discovery on a day-to-day basis of the actual metal. It has to do with trading promises and trying to get out of those promises. And the best way to do that is to smash the price down.
Yeah. Well, you wrote a great article that I quoted from, actually, when I interviewed Rob Kirby just recently. So I feel like I've already interviewed you about this article, Detonation of the LBMA. It wasn't Brexit, Governor Carney. Let's talk about that a little bit, because as you and I have covered, and so many others have covered, the SGE gold fix went into effect in April. We're really starting to see the game change in terms of the precious metals. Mining stocks soar to new heights as big money gets into those stocks. I think that's sending us a very clear message that the smart money knows that this fix can't go on forever. Let's talk about your article, Detonation of the LBMA, because it wasn't Brexit that's causing this issue, was it?
No, pardon me. It wasn't. What's going on is that there has been a creation since the 1980s of what are called unallocated metal contracts for gold and silver. On the London Bullion Market Association exchange there in London, the LBMA. And these contracts, because they're not backed by metal, can be created without limit. And this is what has been used to create these enormous open claims in the spot market. What that has done is it has deflected people from holding actual physical metal into holding claims for metal. And the imbalance now is so great that it's not sustainable. We've got 400 to 600 million ounces of gold estimated claimed in the London market, and between 4 and 6 billion ounces of silver. So there's been numerous signals, starting with 2013, where we saw the London vaults were basically emptied of their visible gold stockpiles. Widely reported. It was covered by Bullion Star. Ken Hoffman of Bloomberg News reported on it, but the price fell from that point as the metal disappeared. And there was a whole series of other indications, including Deutsche Bank admitting that they had been manipulating the London price fix there for gold and silver with the other bullion banks, and turning state's evidence against them in a lawsuit in New York. We've had this disappearance almost of the COMEX claims, the registered silver stockpiles in New York to record lows. And then, of course, as I mentioned earlier, Marco Byrne there of Goldcore mentioned that some of his contacts in London had reported that there was extraordinary stress in terms of being able to secure 400-ounce bars in size. And I would expect to see all of these things as we transition from a paper market where they're trading claims for gold. It's really just chatter about gold. They're trading these things back and forth, not trading the metal. And I would expect to see now a scramble for physical. And as I said, this has been going on for several years, and it looks like it's accelerating now with some other indicators as well.
Yeah. Well, it reminds me of the missing gold in the vault below World Trade Center 6. By the time the common man wakes up, there's not going to be any precious metal in physical form left. And, as we document the collapse, David, I just want to mention this piece I'm seeing today from Zero Hedge. European banks soar as Draghi hints at backstops. They are going to take the people's money by printing and printing and printing. And when printing doesn't do the trick, they'll just start to do bail-ins. And I'm going to steal a little bit of your thunder here because yesterday in our call that failed, you mentioned that John Exner once called gold and silver power money. I love that because as we can see, the central banks are going to take the physical precious metal and leave us with their worthless paper. Why did John Exner call gold and silver power money?
Well, the reason is that the assets themselves are money. We live in a world which is a debt-based money system where money is created primarily by issuance of loans by banks. And so every dollar in circulation starts its life as a loan. So the actual currency unit itself is really a reflection of a claim that someone else has to deliver into. Gold and silver, on the other hand, are assets unto themselves. They just are what they are, and that's what makes them power money. They are money. What we have in our wallets or digitally on our bank cards, that's really currency, and there's a big difference between money and currency. Currencies come and go. Money perseveres, and we see gold and silver have a 4,000-year history of money. We've had about a 100-year diversion into paper money here in the West. But we are heading back, following really the other countries in the world, but we are being forced by the unlimited debt creation that we've had back to a sound monetary system.
Mike Maloney has talked about and really predicted, he's been pretty much spot on with this, talking about first we're going to see deflation, then massive money printing, and then hyperinflation. Where in the stage are we, do you think? Because I continue to bring up the 1988 cover of the Rothschild Economist magazine with the phoenix rising from the burning pile of fiat, and on the cover it said, "Get ready for a world currency." In 2018, by the way. How close are we? How far along are we in this process?
Well, we'll know after it's actually the final hyperinflation appears, but it appears to me that we are in this deflationary or precipitous slowdown is really what I would call it, phase from the creation of excess credit and debt. And what we are seeing then is a economic slowdown, a decline in output for every additional unit of debt that's created. And one note here is that deflation, we associate that with falling commodity prices, which, that's kind of a pop economist's explanation. But what we see then is a stronger money buying more as there's excess capacity and excess product available for sale. What that is really signaling is that money can buy more. And what I find really interesting is we're starting to see strongly rising gold and silver prices. And it's been going on for a decade, but it's back again now after about a 4 or 5 year paper sell down as the metal was disappearing from the market. And so I expect, and I think it's reasonable to expect much higher gold and silver prices as we see that gold and silver can buy more. And they're signaling that by rising not against just oil and copper and other assets in our society, but rising against the currency which is used which is the dollar system and the euro system that we're in right now. So it totally falls in line that we would see these soaring prices. What we will see when this deflationary crash has reached its limits and the money printing accelerates to try to juggle for another week or month or half year, is that we start to see rising commodity prices as well against the currencies which are used on a day-to-day basis here. So when that starts to show up and you start to see rocketing copper and oil and foodstuffs, then we know that we're in the blow-off phase of the currency and that we have this hyperinflation approaching, which signals that the end of this debt-based monetary system. I'd like to say, Sean, that this was completely visible in the 80s, pardon me, with the introduction of these unallocated gold and silver contracts, because what they did with that was they short-circuited the bond market, and by doing so, they led to this global bond bubble, which we are in right now. Mm-hmm. And Michael Oliver has done some very, very good work there at MSA. If you look up his work, and he's showing that we are in a bond market blow-off phase, and he expects it to go perhaps for another month or two, and then a stepwise change in terms of increasing yields. And he's only talking about an increase in yields initially to 4%. But that can drop the value of a 30-year bond of the order of 40%. Just that small increase from the very low interest rates that we're seeing right now. So there's really a disproportionate destruction of wealth that's going to happen as these interest rates climb.
Well, it's interesting that you brought up the bond market, because that was really my next question. I don't think there's a better example of the bubble we're in, the fiat bubble, than the $13 trillion in government bonds worldwide that are now yielding negative interest rates. Simon Black just did a nice piece on this over at Sovereign Man. We talked about it briefly yesterday. What is that telling us, number one? And number two, is the smart money, the money that's at least smarter than the dumb money going into these negative interest rate government bonds, is the smart money piling into precious metal stocks? What do you think the move in precious metal stocks is telling us?
I mean, I really see the strongest move so far in the silver market itself since January, and we've seen, for instance, Coeur d'Alene has increased to 850% of its mid-January valuation. So I would expect those equities to move up much quicker than the metals prices do. Metal can be created from nothing, and there is some claims here in terms of unbacked short selling happening in the equities as well. But so far, we've seen an outsized move in the equities up in value. And I think that is reflecting a move now into the precious metal sector, as the problem in London primarily, which is the physical market, or should be the physical market, is uncovered. So, yeah, I really see these equities signaling to us that and especially the power of that move and the sustainment of that move over more than 6 months, that they are telling us that there's a phase change happening. And I would expect some of the investment funds that have been holding spot claims for metal itself and pension plans, etc., to start moving into, or pension fund managers to start moving into these precious metals through the equities where they can get exposure. But I really see that there's a questioning happening even at the margins, and that's enough to show up because of the imbalance in the market. But seeing distrust starting to show up in terms of the paper Western precious metals markets. And noting last week that Japan was starting to initiate a physical trading of gold contracts there on the TOCOM, another signal that the world is moving towards physical, and that the West is not moving towards physical yet in terms of our exchanges, and that's going to leave us short. So, yeah, I think the smart money or the aware money is starting to move quite rapidly, and I think it's still well less than 1% of the money out there, but it's enough to have this outsized impact on the precious metals equities themselves, with the metals prices following as a laggard.
Yeah. I think we're on the same page there because I've sort of come full circle on the precious metals equities recently. I've made some disclosures about just some small positions I've started to take in First Majestic Silver and others. And I'm going to stay on that story. I'm going to stay on that thesis because, as you know, there's two different schools of thought. On one hand, we have the Andy Hoffmans and the Bix Weirs of the world who warn people about paper assets. In a global collapse of the banking system, in a derivatives collapse, could we see people lose everything, including their stocks, if they don't hold their shares in physical form? What's your philosophy on owning precious metals shares? Do you think that there is room in people's portfolios for a few well-run companies, stocks in paper form? Or are you so afraid of the collapse that these other guys describe that anybody with paper assets of any kind are going to lose everything?
Yeah, I mean, there is the potential here, and I would maybe even say the likelihood that we're going to have a banking crisis, in the future here, and maybe the very near future. And when that happens, these stocks that people are trading are held in the financial system. And so, yes, in Cyprus and in Greece, they had suspension of the banking system, and everybody got their, I think, 65 euros a day that they could take out of the ATMs. And that could very well happen here as well. So there is room for precious metals shares, but they have to be looked upon not as core holdings because of the risk in the system. One note here, though, Sean, is that if we see these equities really take off, there is the potential there that they can be a bit of a counterbalance in the financial system to perhaps prevent its collapse if they rise high enough that they can become the assets which maintain the buoyancy of the system so that the whole system doesn't sink. So we'll have to see, but it's a very, very risky proposition right now in terms of relying on equities for core holdings of wealth. And the world is moving towards real assets, and I would say real assets outside of the financial system have to be the key holdings until we see how this rebalances itself. But
Yeah.
I don't have a lot of confidence that that a person can put their money, pardon me, into precious metals equities and then just sit back and watch the monthly statements or check, on their account online and have that sustain them. There's going to be massive disruption because of the imbalances in the system that have been created.
Yeah, and I think that's completely fair, and I am truly now at this point keeping an open mind, and I'm riding both sides of the fence because I don't think any of us know. I mean, I think you made just a terrific point right there about a counterbalance. Again, what money is moving into these stocks? It's not the little guy like me and our listeners. It's not. It's deep-pocketed, well-heeled professionals. The smart money has caused these stocks to go up 4, 6, 800%. And I do wonder. I wonder if they're not going to go up 10,000% in a collapse when the world does move to physical. So I would just say, as a caveat, anybody who's going to wade into just metal stocks, ask for delivery. As we've covered with Bix Weir, there's this entity, this shadowy entity out there called Seed and Company that holds all of the stocks traded daily. And, we don't really know where the ownership of these shares ends up unless you take delivery of your physical shares. So I just wanted to share that. And I think before we lose you here, we should just wrap up by talking about the global debt situation. Global debt right now is 340% of global GDP. You mentioned Japan. Is Japan going to be the first world nation to hit hyperinflation and then soon thereafter followed by the rest of us?
Really hard to say. Japan's in an interesting neighborhood there in Asia because their neighbors are moving towards physical metals. And it was interesting there to see, as I mentioned, the TOCOM moving to a physical settlement contract, both for spot and for forwards, and also seeing these refineries that have been bought up now by Japanese interests. They've bought both Johnson and Matthey, and they've also bought Metal Ore now in the last 18 months, and these are very, very large refineries. And seeing now, and also I did an interview with Jason Barak.
I want to jump in and say I heard that, and I was stunned by that news about the Johnson Matthey, and I think it's very significant because, as you mentioned in that video, if there's an expectation of delivery, if there's an expectation of physical supply, why would any entity buy a refinery, a refining company?
Yeah,
it's a great point.
Yeah, and it's also to Jason's point there about the electronics manufacturers approaching First Majestic and Avino Silver, and I'm sure there's others that have been approached in terms of trying to secure physical metal delivery for the future. Now, when you're buying from a mining company, you're not buying refined metal; you're buying doré. So that still has to be taken to the refineries and refined. So I find that very curious step for manufacturers when they could go to bullion banks as they have in the past, or go to the exchanges as they have in the past. Why would they, or even perhaps go to the refineries? But they're not doing that. They're going directly to the miners, and there is another signal that we are starting to veer off of the paper path in terms of ensuring a future delivery of metal. And the Japanese signal by buying these refineries is very strong as well, is that they are trying to ensure that they have access, I believe, to the physical metal. They are a nation without substantial resources, and they have to import the resources. And if you have a currency crisis, you're going to have trouble importing real assets in return for distressed currency. So to your point, there is Japan going to be the first. They could be. They're well down the road, but they may also be the first to jump ship here. I think they see clearly the problems that are coming, and that they are preparing themselves for something else. And given the neighborhood that they are in geographically, there's a very clear signal being sent in that area. And Japan can't be the one trying to proffer up their paper yen if everybody's moved to a monetary metal type of currency. So Japan's sending signals. They may be the first to jump ship. They may not wait for the crash. Hard to say, but they are listening to people like Paul Krugman and Ben Bernanke. And I mean, I can't think of more lost individuals to be guiding the monetary ship in that part of the world. So we'll have to see where it goes. But certainly, I think Japan is well aware of what's going on, as I think are many of the Western central bankers. They just don't want to admit it yet, and as a consequence, I think we're heading into this crisis as opposed to a period of policy change. And we'll see things like Governor Carney there talking about crisis coming from Brexit, as opposed to pushing for monetary system change, for stabilizing monetary system change, and for real price discovery, as opposed to these corrupted exchanges that we're using now. And that seems to be the way, is that you create a repository of blame somewhere else, as opposed to wearing it yourself for your own personal sins.
Yeah, I've been watching this series, Mr. Robot, on USA, and it's very well done. It's season 2, and I think they are setting us up to place the blame on some entity, for instance, an anonymous hacking type of group, or they'll blame it on the Russians, or they'll blame it on Chinese hackers. When this system comes down, the trigger will probably be pulled from within, but they will have set up some other patsy or entity to take the blame, and I'm afraid that's ultimately what is coming.
Yeah, well, although we may be seeing the markets voting with their feet so quickly, that there is an inordinate move in the precious metals prices, which I say may help to stabilize the financial system. So, the future is not written in stone, and we'll have to see how this turns out. But it looks to me like there is a tremendous setup, especially in silver, where we're seeing this historically high commercial short position in silver at unprecedented levels, and they're in a very, very vulnerable position right now. And seeing the price action over the last week, I find interesting to see the volatility, and tremendous volatility showing up in the market, both in the equities as well as in the metal itself. But it looks to me, in one day it is not a trend, but it's very interesting to see the snapback today after the drill down yesterday. So we'll have to see where it goes, but really encourage people to take a long-term view, to hold long-term investments. Short-term gambling is fine if people want to do that, but to be aware that we are in a very unstable system, and these metastable systems can just a little bit more of an input, and all of a sudden they break, and the potential is there. In all likelihood, we'll see a longer process. I don't expect a one-day breakdown. But again, the whole system is so unstable that we really don't know the future, and people should be aware of the instability of the financial system that we're in right now.
Yeah, the first time we spoke, I just want to tell people, you said something funny at the conclusion to our conversation, David, off the record. It wasn't in the interview, and I told you how much I appreciated your lucid, measured commentary on this stuff, and I love the way you speak. And you said, well, the content and the information alone contains all the drama. I don't need to do anything on my end. And we live in dramatic times as we document the collapse. David Jensen has been our guest to help us do so. David, thanks so much for your time, and tell people how they can find your work.
Safehaven.com contains my writings to date. 24-hour Gold Eagle are posting it as well. And numerous other websites. SGT Report, I don't know if you've heard of them, but they cover it as well.
Thanks.
So you'll start to see it out there. I hope more and more as people switch on, and hopefully we're going to move in a way that stabilizes the system and protects people's financial stability, and we can find a way to work through the challenges that we're facing out there.
Yeah, from your lips to God's ears. I hope so too, because I don't wish the collapse on anybody. It will be devastating. I mean, look what's going on in Venezuela. I've said for a long time, I want this corrupt system to go away, but I don't want a collapse that brings us to our knees, as we've seen in Venezuela. Very, very scary times. David, thank you so much for your time, and thanks for coming back on after our issues yesterday.
My pleasure, Sean, and I look forward to doing it again.
All right, so do I. And guys, thank you so much for tuning in. Thank you for hitting like if you like this information. Thanks for sharing it if you care to do that. And thanks for tuning in to sgtreport.com for the real news, the antidote to corporate propaganda 24/7. God bless. Have a great weekend.
Thanks so much, Sean.
Thank you very much. I'll talk to you soon.
Okay. Take care. Bye.